Let's get started with some important XRP news for today, everyone. And I must begin with this headline that is generating a lot of attention. Insider knowledge about whales. Justin just revealed some information regarding the PBOC in China. They claim that stablecoins and other virtual assets are not considered legal currency. Due to worries about cross-border risk, AML and KYC, they are declaring such operations unlawful. So we're going to do it again? Crypto is prohibited in China. However, they are also targeting stable currencies this time. To be honest, I believe I understand why. China is so fixated on their own central bank digital money that they aim to drive everyone away from stable coinage. You are familiar with this strategy if you have been involved in cryptocurrency for some time. This is something we frequently witness. It is not novel. The intriguing thing is that they typically take this action just before cryptocurrency takes off. Will the past repeat itself? We will soon find out. Let's move on to something that was exaggerated yesterday. The XRP endorsement claims from Google and Apple that were circulating on social media were immediately refuted by a software engineer. In fact, I made reference to this in the video from yesterday. Yes, you can now purchase XRP with Apple Pay and Google Pay. Here's what everyone overlooked, though. This was not directly caused by Apple Pay or Google Pay. It was merely an app that uses Apple Pay and Google Pay. However, they went too far with it. All of a sudden, it seems like Apple and Google are supporting XRP. Folks, that's simply not what's going on here. Don't misunderstand me. As time goes on, more apps like this will undoubtedly appear. And because of the bottom line, I remain optimistic about this. More people enter the cryptocurrency market when purchasing it is made simpler. That's basic economics. Speaking of forecasts, Jake Cleaver recently stated that he anticipates a memorable December. I'm quite interested to see if his prognosis is accurate. I would really like to see XRP's price rise above $100 due to shortage. Can you envision? He has since reiterated this prediction several times. Thus, it is evident that the man is certain that this would occur. His confidence is obviously something to watch, but only time will tell. This is when the exciting part begins. Christopher Jensen is Franklin Templeton's Director of Digital Asset Research, outlined Franklin's plans to scale their digital asset strategy globally by 2026. This week also features a few institutional events. In my opinion, institutional demand is a really intriguing benchmark this year. According to Franklin Templeton, how would you currently assess institutional demand in 2025? Yes, a wide variety of things. Therefore, one is rather anecdotic in our discussions. I mean, when we consider institutions, this can be everything from little organizations to massive sovereign wealth funds, and pretty much everything in between, including endowments and pensions. On the other hand, I do believe that there is an increase in institutional desire when we consider, for example, the ETF or ETP product and the mix of buyers there. Indeed, such kinds of items are a fantastic way to get a taste of digital assets. In addition, I believe we're witnessing a need for exposure that may be beyond what those ETPs actually provide. On the asset class side, there is a readiness and appetite to consider various ways to gain exposure to the technology, as well as a willingness to embrace it rather than merely be open to it. Is he essentially stating that certain organizations wish to retain the real asset? Because it makes perfect sense for these institutions to start building treasuries around XRP when you properly look at it and realize what it's designed to achieve. And here's the thing. 2026 already appears to be very promising for cryptocurrencies. Recently, the National Cryptocurrency Association released some intriguing adoption study. We were reminded of the value of small businesses in our communities by Small Business Saturday. And you know what? Consumer behavior is changing quickly. More Americans are interested in utilizing cryptocurrency for daily purchases, according to their most recent data. And companies, they are beginning to directly address that desire. Look at these figures. Approximately 1/3 or 31% of U.S. companies now take cryptocurrency payments. 3 out of 5 cryptocurrency owners now use it to pay for products and services in person and online. The worst part is this. If more stores took cryptocurrency, 82% of cryptocurrency owners would think about using it for purchases. Additionally, 21% of consumers are more willing to shop at establishments that accept cryptocurrency payments. Among real cryptocurrency holders, that percentage rises to 55%. Do you understand what this means? Big box retailers may lose out to small firms that take cryptocurrency. Well, that was a smart move. Nowadays, a lot more people are beginning to own cryptocurrency, yet when you can truly use it to purchase goods, you know it has genuine value. For my part, I wouldn't be using my XRP to purchase anything at this time. Perhaps in the future. Here's my plan, though. I would prefer to use my XRP to generate passive income, invest it in a stablecoin, earn yield from the stablecoin, and then use that same stablecoin to purchase goods. I believe that all XRP holders are already on that course. And to be honest, we are about to start making money with our cryptocurrency. Now finally, on a more somber note, another exchange hack has occurred. Upbit, a cryptocurrency exchange based in South Korea, reported $30 million in losses from a recent attack. Given the enormous demand for XRP in South Korea, I assume that all of their supply had already been depleted. But really, this is something that occurs frequently. I can't emphasize this enough, it's simply another reminder. Avoid holding your cryptocurrency on exchanges. People safeguard your assets because losses and hacks happen. What truly bothers me, though, is this. You have no idea what goes on during these conversations. I can't emphasize this enough, particularly at this moment. A huge surge in XRP is about to occur. When that occurs, do you really want to keep your cryptocurrency on an exchange? Consider it. We are well aware that the exchanges will all collapse once XRP enters price discovery mode. When Bitcoin was hitting fresh all-time highs, we witnessed the exact same scenario. As long as XRP is doing the same thing, nothing will change. Let's go technical now. ACT wants to know if XRP has reached its lowest point. As a Wave 5 breakout is initiated and approaches completion, the support is holding. What to watch is this. A bullish trend would be confirmed by a close above $2.22. However, there may be more significant drops if we are unable to maintain $2.17. To be honest, all I want to do is watch where XRP goes next. I believe that there will be more bullish movement for XRP during the whole month of December. Will the pricing, however, reflect this? Who knows for sure yet. There is a constant refrain that we must maintain this support line. But what do you know? Right now, the charts continue to appear extremely bullish. All I want is for the breakout to start right away. Speaking of contentious opinions, I believe that MOTLEY despises XRP. In a recent piece, they posed the question, should you purchase XRP rather than Bitcoin? They argue that XRP is overpriced in this article. Additionally, they think that because Bitcoin is allegedly undervalued, people ought to purchase it. Right now, allow me to tell you something. If you are unable to purchase a single Bitcoin coin, you should not be a retail investor. Holding it at all is pointless. It's never going to make you wealthy. No matter what it is, they always insist that you should have at least 0.01 or 0.1 Bitcoin. However, how are you going to profit from that? With XRP, your return on investment is significantly higher. The motley fool simply detests this cryptocurrency. I suppose that's where their Bitcoin maxi is. Here's something truly fascinating. According to Dr. Jim Willey, large banks are purposefully depressing the price of XRP in order to buy more at a discount. What exactly did he say? Keep it around $3, please. Willey claims that big institutions, such as Bank of America and Bank of New York Mellon, are specifically working to keep XRP below $3, so they may buy big quantities before its price rises. He claims that these organizations are purposefully keeping the price low in order to accumulate XRP before the market realizes its full worth. He goes so far as to say that these banks might be working directly with Ripple. He thinks that rather than paying $7.98, which he feels is far closer to its genuine value, they want to stockpile XRP below $3. This is what people have always said. In the absence of the Ripple versus SEC case, XRP ought to be trading in the 813 range. XRP would already be in the middle of those two price points if that scenario never occurred. In my opinion, XRP has not yet fully recovered from the Ripple versus SEC lawsuit. Here's the